All right, you are welcome to Boom and Crash Expert Advisor. I believe you can hear me. I see Scholastica. I see Sunday. You're welcome. I see Nkosikona. Am I pronouncing it well? All right, good, good. So we want to take a look at the markets. I believe you had a great day. How many of you made profits today? Because I made some small coins today. Whenever you try to overtrade and get more money, the market teaches you a lesson. And that's one thing I've learned over the past few months. Trading boom and crash. So when you meet your daily target, you just close for the day. If it's $50, that's enough. You close for the day. Oh, Scholastic, I made money, right? That's good. That's good. I like hearing that. So which markets for I want to have your opinion on this. Which market has favored you the most? Is it crash 500, boom 500, boom 1000, or crash 1000? Is that greed? It's true. When you become greedy, the market teaches you a lesson. Oh, sorry. Sometimes you get about $100, $200, and then you increase your lot size, and then you just come down. So you hit your daily targets, you just come out. I've lost several times by not complying to my own policy of having a daily target. I realize whenever I'm able to meet a daily target, but when I try to trade more, I just lose. So I think from last year I made up my mind that when I hit a daily target, that's enough for the day. I'm just closing. It doesn't matter how tempting the market looks for me to enter. I'm just closing, because sometimes it looks very tempting after you have earned some profit. Yeah. So I'll be looking at the charts. All right, I see crash 1000 for Mikize. Oh, that's good. That's good. Crash 1000. I think crash 1000 was. It was a. Let me take a look at this. Yes, it was now moving upward. Crash 1000 was moving upward. Okay, so you follow the trend. Good. And this is why sometimes I don't want to close and get out of the market, because sometimes when you close in a loss, it turns in the opposite direction. I think I set a buy limit and it was going deep down. I think it was minus 17. So I had to come out. And when I came out, I think about 2 hours time, the market reversed. Yeah, that's also one downside of the whole thing. So I'm going to press Control Y. Now you see, you wouldn't see a black vertical dotted line until I press Control Y, and then you see it here. This means that the day ended here. So I can drag it backward and look for the next black dotted line, which is here, which means that within 24 hours, this is where the market started. Okay, with this high the high of 5961.097, and then ended at the other end. Okay, so now let's take a look at how the market has performed. But because I want a better view, I'll switch to maybe M5 to get a better view, and I'll zoom in a little bit. Let me take out my one-click trading with Alt T. Okay, I think I have something better. 15. Let me try 15. Let's see. I want to capture the full day from here to here. Okay, so I'll put a red line there, here, and then here. So let's see how it moved. Yes, so we had I believe you are already familiar with support and resistance. If you are familiar with support and resistance, this will be quite easy for you to understand. Okay, so we had a slanted support here. Okay, now support is when you have price rejecting a certain, it keeps bouncing off from a lower level. That's support. It creates a support. So when you have two or more, a support is confirmed. And if you have three, if you have the price bouncing off a certain horizontal level, let's say this level, okay, if you have price bouncing off this level about 3 times, the third one is showing a strong support. Okay, that third one is showing a strong support. So we have a slanted support here. We have price bouncing here, 1, it starts here, bounces 1, goes up, comes down and bounces 2. We have 2 bounces and comes down 3. It bounces 3 times. This was at the beginning of the day. This was at the beginning of the day. Just I think some few hours into the day, we had the prices bouncing, creating 3 support points. So 1, we started with the support 1, 2, 3, and then 4, and then went up. Okay, now you realize that at this point there was a channel, there was a diagonal channel formed. Okay, now at this point it's not clear when you should enter a trade within this particular zone. It's not clear when you should enter a trade, so you have to wait for either the support to break or the resistance at the top to break. Now support is when price bounces off on the lower level, okay, and resistance is when price bounces up at the higher level. So you'd have to wait for price to break either a resistance at the top here or a support down here. Do you see that? Then it broke the resistance at the top, so it crossed this diagonal line to the top. Now if you are scalping, once it breaks, you can come in and buy, and then you pick your profits. For scalpers, you just need about 5 candles and you are out of the market. So when it comes here, when it breaks the resistance, this channel, then you buy and set a close TP, because you cannot be too sure until the market has really formed. You cannot be too sure. So from here it goes down again and hits a support. So you realize that this line, this trend line, which is M15 trend line 32430, which was a resistance, has now become a support, because when price got here, it bounced off it. You see that? So price broke the resistance, went up, and then came down and formed a new support. So this line here, the line at the bottom here, this one was the initial support, and now we have a new support, which is this. Then price went up again to this point, then came back to hit the support. But when it hit the support, guess what? It broke the support and it entered a new channel. I mean the old channel. Okay, it broke the new support and entered the old channel again. So at this point, once the support is broken, you have to sell here. So this will be your selling point. Let me increase the thickness. this will be your selling point. Then you set your TP. Sometimes people ask how much should my TP be? It depends on how the market is moving. Okay, so whenever there is a break in support or a break in resistance, you can enlarge the scope of your TP because there will be enough gap. Okay, so you set your TP here, then it comes down, it keeps coming down until there's a change. Now there is a V shape here from where we started selling to where the market started to reverse. There was a V shape. Okay, so this is like getting close to 12 p.m. because this is the end of the day and this is the beginning of the day. So we are somewhere 10 a.m. 11 a.m. This was what was happening. Okay, then the market reversed, then it entered the old channel again. Let me stretch this. So it comes here, and then at this point, okay, at this point in time, we can't confirm a resistance because it needs to bounce off before we are confirming a resistance somewhere here. But then it breaks through the old channel and breaks again. Now you realize this was our old support. Now from here it breaks that was our new support. This line was our new support. Okay, because this was the old support, then this was the new support. So price comes here, breaks the new support and keeps going up, and then creates another support and resistance. So what happens is, after entering here and taking your TP here, don't enter yet. Hold on, because you don't know, the market might just reverse here. So hold on until you have a resistance and a support forming. So what happens is that most of the times we feel like, oh, the market is trending, let me just join. And immediately you join, there's a spike. How many of you have experienced that? You see a market moving and moving and moving. The moment you join, there's a spike. And you are so angry with the market. How many of you have experienced that? Let me know in the box, in the chat box. Yes. So what happens is we now have a new resistance forming. So you saw that price bounced off after price accelerated from here and was going up. You saw that it stopped at a point. The momentum of the rise stopped at a point and it was coming back. So what you do is you take notice of that point and you call it point A. You call it point A because that was the point at which what price reversed. So we are noting that point, and price reverses, gets to this point, and put a horizontal line here, and it bounces off. So you call it point B. Now you have two borders, okay, which is line A, border A and border B. Border A, border B. So now you are predicting the price is going to be within the A and the B zone. Sorry for the mini lines. I think I should delete some of the lines. Oh no, let me keep them there for future reference. So you now sense that price is going to move within A and B. Then it bounces off from B. Now you're able to put the B there because you saw that price was rising. Good. Then price breaks this. Now we cannot confirm a resistance, so we cannot say there's a breaking, but we can just say there's a movement. So price moves up, bypasses the A and starts to come down. So you come in with your text 2 and put another point there. You call it point C. So this whole thing is not just about seeing the market and being like, wow, that's a good time to make money. You need to relax. Take your time. Look at the movement of the candles. Look at the movement of the market. And this is why I tell people that I don't like to trade with indicators, because I feel like indicators always follow the movement of price. So indicators are more like secondary helpers. They can help you secondarily, but they are not the primary guides, okay, because they always follow the candles. So now we have C here, and then you see that price is moving down away from C. Then immediately you come in with your trend line and you connect A to C. Then we call it what? We call it a resistance, because price is resisting a movement upward. Then price moves down and returns close to B, and it goes back up. Then you look for your text tool again, point to this area and call it D. Then you take your line and connect B to D. So what do we have? Do you see what's happening? Let me stretch this. Let me stretch this out. So we have a new channel has formed. A new channel has formed. So you realize that we have to, like, we are always looking at support and resistance points. We are always hunting for those things, because those are the things that can help you make the best choice in a trading position. Okay, so now D has price bouncing off it and it goes up. It doesn't even get to that same resistance zone and it keeps coming down. Then it breaks the support we have here. Let me write it. Support. So this line is a support. This line is a support. Okay, hold on please. Let me so this is our support. Then we are looking for when price is going to come out of that zone, that channel. We are looking at when price is going to come out of that channel. So immediately we see price breaking this. Now at this green candle, you might be confused and you might think that price is going back up. But what happens? Price closes at this point. Then a red candle is initiated. So at this point, you have confirmed that we have broken our support. So you enter. This is like a war strategy. Now let me change the red. It's like war strategy. You're always looking for when it's convenient to enter. I couldn't change it. What's happening? Let me maintain the red. So the support is broken, and then you enter at this point and you set your TP not too far away, a little bit close to it. Okay, then you pick your TP. So from here you earn, this is just boom 500. From boom 500 you have one trade, maybe you got like $10 to $20 from here, and then you came here, entered, and got $10 to $20 from here. That's $40, and we are just in the middle of the day and you have $40. Do you see that? Now if you have enough equity, you can even stretch your TP. So that is how you take your time to analyze the movement of the candles. We are using M15, 15-minute time frame. You can also check 30. 30 will also have its own stuff to tell you. Okay, so from here you even see on the 30 that the 30 and the 15 are confirming the same movement. From here we entered the selling point because this was broken, and we entered the selling point. Then you see the B and D broken again, then we entered. So 15 and 30 are confirming the same operation. Then you enter. So just for boom 500 alone, we are earning about $40 or about 20, within that range, $20 on boom 500. And no trade, we have carefully analyzed it, so we are assuming that no trade has gone wrong. Then it means that we have about $20 to $40 for boom 500. I think that if if someone makes $20 a day as a side hustle with Boom and Crash, I think is fine. Yeah, at least for the start, that's cool. Yeah, so far, do you have any questions? Let me know in the comment box. Right, any questions? Anything you don't understand? Now into the day, there's a new day. We have Boom 500 making a downward movement after hitting a resistance over here. Then you come in and you do what? You sell. So this is a good selling point for Boom 500. This early morning, you could have earned this amount on that market. I'll be checking your questions very soon. Okay, let's take a look at Crash 1000. Let's see what's happening. So we have end of day at this point. This M15, and we have the beginning of the day at this point. So the day we entered the day in a resistance forming here. Okay, price kept on hitting that resistance, and we confirmed the resistance after 2 points have been hit. So 1, 2, so we are already in a resistance, but we cannot really tell, sometimes you cannot really tell how far it's going to go down here. Okay, down here. So you might hesitate to take a buy because you feel when you take a buy it might spike and keep on going and blow your account. That's why I said on the page that if you're afraid of the spike, don't trade against it. If you're scared of the spike, don't fight it. Trade for the spike. And if you trade for the spike, you can control your losses. I hope that makes sense. So we started on a resistance. Then we'd have to wait for the market to turn. In other words, we have to wait for the resistance to be broken. So we have to stretch our trend line, stretch it across the screen, and then wait for a break in the resistance. Then at this point we have a break, which means that the market is tired of spiking. And this is why I teach people with low balance. If you have low balance, wait for the market to be tired of spiking. Then you come in like a sniper, you buy. So the market is tired of spiking, then you come in here and you buy. And when you buy, I don't want to talk about Fibonacci, maybe in another video. Okay, you buy and you set your TP. Let me use this. If I buy from here, personally I'm going to set TP somewhere here, because the market can be very tricky at times. So I'll set TP somewhere here, and then it's going to go past it. And sometimes when it goes past it, you're like, oh, I should have increased my TP. But the thing is, you actually never know when a spike is going to occur to destroy your trade. So it's better you leave a market with a profit of $10, $15 than to be down by $5. It's always better to earn one extra dollar than to lose $100. So even if you miss out on too much profit, it's better than losing. So you come here, you take your TP, okay, then you keep watching the market. So you can enter here with, maybe if you have an account balance of maybe $100, you can enter with about 0.2, 0.3, okay, 0.2, 0.3, just to be safe, and you're practicing risk management and all that. So you can look at 0.2, which is the lowest, or you can look at 0.2 to about 0.7 for a $100 account. If you have more than that, well, you can risk it. As they say, you have to risk it to get the biscuit. So you risk it here, you go up, you TP, then you keep watching the market. Then you see that the market will retrace a little bit, but the retracement of the market is not so strong. It's not so strong because there has been a strong wave of downward trends over here. So the next downward trend, the next downward trend will be less strong. Okay, the strength of it will go down because it has already trended heavily before that. So you wait again, and then when it turns, you enter a buy. Now at this point, if it starts spiking downward, as sometimes it might do, if it starts spiking downward, you can be sure that the market will buy again. So don't be too quick to close a trade that is in a loss, because many times the trades that you close in losses, they come back into profit, and you're like, oh, I should have left it. Because sometimes at the point at which your trade enters a loss is not a point that you should be scared of blowing your account. And it all depends on this kind of analysis we are doing. Okay, your question is M15 the best time frame to analyze with if you have small account like $20? Yes. M15 is the best time to use if you have a small account. If you have a big account, H1 is the best. And if you have even a very huge account, then H4 is the best. So M15 is for small accounts. M15, your maximum should be about M30. Now the reason is, when you have a higher time frame, okay, the market, you cannot scalp on a very high time frame because it takes hours for a higher time frame market to form. That means that the question is, can your small account survive many hours in the market? No. So then you use a smaller time frame. So that's the reason. Good. So from here you buy again, and the thing is, you can take 2 good trades per every market. So I'm going to set my TP somewhere here. Now this is where I'll get a little bit shaky when this spike comes in. When this spike comes in, I'll say, wow, I might enter a loss. So when it spikes 1 or 2,